Hello everyone, welcome back to my YouTube channel. Running a business often means you need capital, whether it is for inventory, unexpected expenses, or seizing a growth opportunity. And if you're a QuickBooks user, you know, you've probably seen those loan offers pop up. So the big question is, are QuickBooks loans actually good? Let's dig in and find out. The biggest selling point for QuickBooks Capital loans is their speed and seamless integration. Since QuickBooks already has all your financial data, your income, expenses, cash flow, the application process is incredibly fast. I mean, we're talking decisions in minutes and funds in your bank account in as little as 1 to 2 business days. Okay? It is like having a fast food drive-through for business loans compared to the sit-down, formal restaurant experience of a traditional bank loan. If you need cash quickly for working capital, covering invoices, or a short-term need, this speed is a huge advantage. Now, when you come to the top features here, you uh, top features menu, you see term loans. Okay, yeah, you see term loans. Now on the terms loans page, from here you see get funding in as fast as 1 to 2 business days after approval. But let me quickly highlight the pros and cons of QuickBooks alone. Okay. Now for the advantages, there is no origination of prepayment, no origination of prepayment fees. This is a big one. You won't get it with upfront charges just for getting a loan, and you can pay it off early to save on interest without penalty. All right. Now another advantage is data-driven eligibility. They leverage your QuickBooks data, which can make it easier to qualify even if you have a less than perfect credit score compared to traditional banks. Okay, that's one of the key advantages. The another advantage is simple application. It is all within your QuickBooks account, so there is minimal paperwork. Okay, now another key point or key advantage is builds business credibility. They report your repayment activity to business credit bureaus, which is great for building your business credit profile. Okay, and another advantage is that they offer loans typically from $1,500 up to around $200,000 for term loans and lines of credit as well. Now, under this explore the features, apply in QuickBooks, save time, it only takes minutes to apply and get a decision. Then flexible terms here is loans from $1,500 to $200,000 with terms from 6 to 24 months. Okay, and competitive rates. It's a business loans with no origination fees or prepayment penalties. I've already highlighted that. So those are the advantages. Then, but for the disadvantages, number one is interest rates. The annual percentage rate can range quite a bit, typically from 9.99% up to 34% or even 36%. While competitive for online lenders, it can be higher than what you might get from a traditional bank if you have strong credit. Another disadvantage is short terms. Loan terms are generally short, are often 6 to 18 months, sometimes up to 24 months. As highlighted here, it's usually from 6 to 24 months. Okay, so this means higher monthly payments compared to longer term loans. Okay, then uh, personal guarantee. This is one of the disadvantages. You will likely need to provide a personal guarantee, meaning you are personally responsible if your business defaults. Okay, another disadvantage is another disadvantage is QuickBooks user only. Obviously, you have to be an active QuickBooks user to qualify. Then another thing is limited for large or long-term needs. So for massive expansion, for massive expansion projects or very long-term financing, you'll probably need to look elsewhere. Okay, so that's that. So are QuickBooks loans good? They can be excellent for the right situation, particularly when you need quick access to capital for short-term needs and you value a streamlined process without hidden fees. They are a strong option if traditional bank loans are too slow or too difficult to qualify for. However, if you have stellar credit, time isn't a critical factor and you need a very large sum or a long repayment period, it is always wise to shop around with other lenders or explore alternatives like lines of credit or even SBA loans. Okay, ultimately, like any financial product, the goodness of a QuickBooks loan depends on your specific business situation and what you value most. So that's it. If this breakdown helped you, hit that like button, subscribe for more software reviews, and let me know in the comments. Have you ever used QuickBooks Capital and what was your experience? See you in the next video. Thank you.